Hello financial investors and welcome to the channel. My name is Brent, and in today's video we are going to be doing our stock market weekly recap for the 21st through the 25th of December 2020. It is the last full week of 2020 with only 1 week remaining and 4 days left here in 2020. So what we're going to be doing in this video is quickly covering our last video that we had posted. It's been, I believe, 2 weeks since we had posted a video. Also, we'll go over a little bit of what is going on in the news as far as current news with Trump and that new stimulus package that is to be released. Then we're going to go ahead and quickly cover the 4 main indexes, take a look at their performance over this past week, take a look at the entire S&P 500 performance, what stocks were up, what stocks were down, what sectors were strong, what sectors were weak. Also take a look at oil, the dollar, silver, gold, bonds, 10-year rate, and wrapping it up by taking a look at the mortgage rates currently. I like to do these on a week-by-week basis just to keep track of where we are going in the market, where we have been back in the history, with current events that are going on right now globally or here locally. It's always fun to kind of keep track of what had happened and how it affected the market. With that said, if you are brand new to my channel, have not yet subscribed, go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time I release a brand new video, and of course give this video a thumbs up, make it blue, and let's go ahead and get into the video. Now, on Monday, President Trump recently came out and signed the bill, but the way that he had done it is that he is going to be using the Impoundment Control Act in order to gut wasteful spending. So on Monday, the House will vote to increase payments to individuals from $600 apiece to $2,000. Therefore, a family of 4 would receive $5,200. He added, additionally, Congress has promised that Section 230, which basically, help the big tech companies at the expense of the American people, kind of get moved out. So this article, I thought this was an interesting read, and I had never, really heard of the Impoundment Control Act of 1974, but there was an excessive amount of additional stuff added into the stimulus package. All that we were trying to push this out for was to help individuals that had been laid off from work, that were not getting unemployment, that needed this money. So there is a portion here in the article that kind of goes over, we're trying to help the millions of people as a whole, as a country, not others external to the United States. So there was a piece within here that I thought was really cool. So yeah, basically, Trump had said that I am signing this bill to restore unemployment benefits, stop evictions from taking place, provide rental assistance, add more money for PPP loans, return airline workers back to work, and all other workers that are sort of out of work, all that assistance here local within the United States, and then add more money for vaccine distribution and much more. So, just trying to help those here within the United States. So I think this is a really good push from President Trump. But of course, let me know down in the comment section below what is your opinion of what he is trying to do. He's trying to get a bunch of other stuff removed out of it that is unneeded and just added because it could be added and that Trump needs to sign something. Otherwise, it kind of looks negative for him. So they're kind of hanging that over him in that way. Now, taking a look at the stock market this past week, we look at the S&P 500. It basically moved flat, down 0.17%. Monday, it started off really bad on Monday. I believe when I had looked at futures or when I had looked, actually, I don't even think I looked at futures last Monday. I don't think I did any sort of stock market investing. This past week I was completely off. I took the week off from work, and I believe the week prior I had even looked at the market. So it's been about 2 weeks since I haven't looked at the market, and it looks like it hasn't really done a whole lot since I left. So here we are. It took a big dip there on Monday, but recovered, only being down 0.4% versus probably 2 or 3% there in the day. Tuesday again pretty flat. Wednesday pretty flat week. It's holidays. A lot of the big money spenders are not in the market at the moment, or they're on their vacations. They're just not watching the market. They don't really care. So 5-day change was essentially flat. The S&P 500 is looking like it's going to be ending 2020 up pretty nice. despite what took place here in 2020, the market still racked up a nearly 15% gain there on the year. The Dow Jones, pretty positive. I mean, overall positive, but essentially flat. Essentially flat for the week, up 0.07. Now, the Dow Jones didn't move as much as the S&P 500. It basically moved about half of it, nearly up 6% there on the year. The Nasdaq is the big winner. I hadn't put too much money into the Nasdaq in itself. I think my most techie stock that I've bought is Apple, and that is up massive within the portfolio. I'm thinking back, wishing that I hadn't sold a good portion of my Apple shares. I think I had maybe $6,000 to $10,000 of Apple at one point, but I had sold them to buy AbbVie. So, tomatoes, or tomatoes to peas. So, some stocks maybe I should have just kind of kept through the whole illness and such, because of the possibilities that they could have unlocked. So, definitely tech-heavy companies did get a big win this year. Nasdaq is there with 42.71% to the upside, and over the past week, it's probably one of the most positive indexes as far as change, up 0.38%. The Russell 2000, this is those small mid-sized businesses. This one had been hurting not too long ago. The Russell 2000 was the most beat down index of the four main indexes back during the initial hit back in March. Why? Because all these local states had been shutting down all these small mid-sized companies. There's still a lot of companies that are out of businesses that will probably never reopen again, but those that were able to kind of maintain and get through this point, looks like a lot of their shareholders are going to be rewarded for it, because it is up 20.11%. But the stock market is completely different than the local employment. People still lost their jobs, and there's still a lot kind of going on there. I think it's kind of interesting to kind of see how this will kind of play out in 2021. But overall, Russell 2000 there is in second place, being up 20.11%. Now, this is our weekly move for the week. This is our 1 week performance right there. We can see that our big companies, our tech companies here in technology, Microsoft up 1.52, Apple up 2.54. It did a stock split not too long ago. I believe it was 3-for-1. It's now back at $131. So I forgot where it was at when it split. I think it was maybe like 110 or so. So it is still gaining traction quarter after quarter after quarter. Adobe also pretty positive. Oracle pretty positive. Now, this is sort of new down here. It looks like they kind of split up the credit services. They have PayPal, MasterCard, and a few others down here that I don't remember having. And then we see our banks diversified. JP Morgan up 4.05, Bank of America up 3.92, Citibank or Citigroup, and Wells Fargo up there 1.26. So basically this past week, looking at the entire S&P 500, some of the indexes that did well. Hey, look at Tesla. It's over in the auto manufacturer alongside with General Motors and Ford. Now, of those three, I would definitely choose Tesla over the others, and it looks like others have chosen the same way. But the two big areas that were pretty positive were technology with the businesses here, and banks. Banks and technology did good this past week, whereas the rest of the market kind of sank. But that's all that it needs. With financials and tech, they make up, I believe, 30 to 45% of the S&P 500. So with those two sectors strong and the rest of it weak, that's why we maintain that flat for the past week. Now, oil down 1% year to date, down 67.96%. The dollar continuing to move lower week after week after week here. We started the week at about $90.09. It is down to $90.04. I believe the dollar will continue to get weaker. And with this new stimulus push of billions of dollars getting sent out to overseas countries, here with the United States as well, and just all over the world, I believe that the US dollar is going to continue to sink down into the $80 mark. Silver down 0.58%, still up year to date by 43.94%, beating out gold, which is only up 23.41%. Gold moving to the downside by 0.22%. Then we have our bonds, which went ex-dividend here back on the 23rd of December, right before Christmas. Nice little Christmas present. Bonds are actually doing just as good as the Dow Jones, being up 4.92 year to date. And this past week, they're essentially flat, being down 0.16%. Check that out. Our 10-year Treasury rate is at 0.93%. So the 10-year Treasury rate has been moving up very quickly. I'm not sure if that'll mean that our savings rates will begin to increase. I haven't checked out Ally, CIT, Marcus. I really haven't been paying attention to my savings accounts. I just know that I am saving at the moment because we're going to be buying a home here in March, and we just got notified that they're pouring the foundation. So I believe that they poured the foundation this past week, so we're finally moving forward. It's going to take roughly 120 days to complete the home, but I'm going to be doing some updates and posting them over on Instagram as we're making progress, and hopefully after that is done here in 2021, it'll be about March, we'll have our own personal 3-bedroom, 2-bedroom home listed and sold really quickly, and then I'll be taking that money that I make from that and reinvesting that in the stock market or to continue building up my real estate business, because right now I only have 3 doors. I'd like to accelerate that, maybe doubling it here in 2021 to 6 to 10 doors is my potential goal, depending on how everything goes here for 2021. Hopefully I can find some deals out there. And then our current mortgage rates continue to fall. It is now at 2.95%. So this is one of the lowest points that I have seen here in quite a while. So I'm really liking that mortgage rates are staying low, because I am not going to be able to mortgage or finance my home until March. So I'm really hoping that I get that 2.25 to 2.75 mortgage rate for 30 years locked in. So that is essentially all that we're going to be covering in this video. My last video was back on December 13th, I believe. So hopefully, we're going to continue to make videos here on our Saturday, Sunday videos, kind of going over the recap. And then we're going to be bringing back some weekly videos, going over stocks to buy, what stocks I'm planning on buying, and just talking about stock market, dividends, and growth companies once again. So with that said, if you are brand new to the channel, have not yet subscribed, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video, and of course give this video a thumbs up, make it blue, and I will see you guys in the next video. Bye bye.